this is the buy signal here. Okay?
So that's based on activity of the stock market.
That's based on, yes, that's based on the stock market making highs. So that's price action. If you look here, we call this resistance. So what happened was this. Back in September, here is our trend. Let's do this here. So back in September, we broke resistance. So here's price, here's our resistance line, okay? And then price touched resistance here. It didn't break. Retraced, came back, touched resistance here. Didn't break. We never got a buy signal because these were false moves, false breaks. It wasn't until here that we got real money into the market, into the stock market, and then our system, our algorithms gave us a buy signal here, plotted this buy signal here. So at this point, heat seekers started to move and give us picks. Now, if you look here, this is...
Because it has to break resistance enough for it to recognize that it's a...
Exactly. It's a real move.
Because right there's boom, boom, back.
Yeah. And here, so our system knows that, hey, these are not real moves. These are, this is light volume. So we don't have any real volume. So it wasn't until here that we got real volume and we got the buy signal here, and price is now moving higher. At some point, we will get a sell signal. So if we do this, if we go back in time, oh, this is real time, here is the market here. Okay, this is today's action here. So if we go back in time, you'll notice that here was a sell signal, and this was back in May. So, there's a saying, sell in May and go away, right? Well, here was our sell signal in May to get out of the market. And look what happened. Here's our sell signal to get out. And here is the market going down. And then here is September. And then we got a buy signal here. So all summer long, and usually there isn't any money in the markets in the summer months.
Because they're in the Hamptons.
They're in the Hamptons, right? Traders have to take vacations also. So there's usually light volume in the market. Because those institutions and hedge funds are not in the market in the summer months, and then they get back, and this is seasonality. The best time to get into the market is in October, usually. So here is our buy signal in late September, October, and here is the market moving higher. Now, if you go back, we'll pull this up here, and we'll take a look at uh, 2008. The market crashed in 2008, and here was our sales signal to get out of the market in about June of 2008. Our system got out, told us to be out of the market, so we exit the market. And then here is the market crashing here. All right? And then 2001, it's the same thing. 2001, let's see here. Where's 2000? Here, 2001. Here is our sales signal here to get out of the market, and here is the market crashing. Okay? So it's important to stick with those buy and sell signals. Now, if we look here, after the market crashed in 2008, we got a buy signal to get back into the market, and here is the market moving higher. So what happens is this: when we get a sales signal in the market, heat seeker basically dries up, and we'll bring heat seeker up here. So here's heat seeker with all those picks, And if you notice, heat seeker stays within a sector. So out of about 144 sectors, heat seeker knows that most of the money is going in just a few sectors. So we've got healthcare, basic materials, financials, energy, and we've got technology also. Technology is here also. So out of 144 sectors, we only have about 6 sectors that all that money is going into. Now, if you look at the volume here, you will notice that we've got, and this is a 3-month average volume, 37 million shares being traded here, 88 million shares, 30 million shares, 131 million shares. So there's real money in these stocks within those sectors, okay? And we track 8,000 stocks in HeatSeeker. Now, HeatSeeker runs at the end of every day, and you know, we'll just go through an example here, and we'll just run it. And if you look here, almost 8,000 stocks, and in about 2 seconds, here are the new picks. Here are the new stocks. The stocks that are in yellow here are the new picks that's tradable, that we can trade. Now, if you notice, it still stayed within the sector. Now we have more technology stocks here, right? We've got some, let's see, healthcare stocks here. So we've got more picks. The market's moving higher, so we've got more picks. But think about how long it would take you to figure out what to buy. Now let's do this. Let's just pick a stock here with high volume. So let's pick this one here. We'll just pick a random one, CPST, and let's bring this up here. And you'll see the buy signal here was at 88 cents, and now it's trading at $1.21. All right, so that's a pretty good trade, and it's traded on pretty high volume. The volume on that, let's see here. The volume is 40 million shares traded in capital goods, and that's one of the sectors that they're buying. All right, turn it on.